What's up, everyone? It's Karthik with Moneyvest. So markets here selling off after hours because of the big bloodbath that happened after Tesla reported their numbers, and they were down almost 8%. Google was down a little bit over 2%, or I should say still is down close to 2% after reporting their earnings for second quarter 2024. So in this video, we're going to break down some of those earnings numbers and also take a look at the market's reaction and what can we expect from tomorrow, because we do still have a lot of companies reporting, and I did an analysis on the earnings volatility with respect to Magnificent 7, and so far it is working out as planned. So make sure that you drop a like and subscribe to the channel. Again, if you want to get access to the entire Moneyvest platform, currently we've got a 51% discount that's available until the end of this month. You can access all the trade alerts, trade ideas. You get full access to our Discord channel, as well as the Moneyvest platform. We added the earnings calendar where you can track every stock, every company that's reporting their numbers broken down by each day and each week. You can toggle for last week, and you can also look at next few weeks that are coming up with earnings. This is going to be the current week that we're in, and you'll notice Google reported their numbers. We got Tesla over here with a beat on revenue at over $25.5 billion, but a huge miss on earnings per share, 52 cents per share. Enphase coming in with a double miss, Visa coming in with a double miss as well. Sherwin-Williams reported earlier this morning a beat on earnings per share, miss on revenue. UPS with a double miss, and it was selling off over 7-8%, I believe. But Tesla was the big name that was selling off over almost 8% on the day. And this right here is the earnings. So you'll notice that they actually reported a 7% decline in auto revenues. So if you come down a little bit, you'll notice 52 cents per share versus 62 cents expected. So a miss on earnings per share as expected, because we were expecting the numbers, because of the margins, they're going to compress a little bit of those profit margins. And revenue came in at $25.5 billion, which is exactly what we have on the platform. As you'll notice, beat on revenue, miss on EPS as well. Revenue increased 2%. From $24.93 billion, because if you plug in some of those numbers onto our spreadsheet, you'll notice that 25.5 is a 2.3% increase on a year-over-year basis. So that again is actually pretty solid. But then if you come over to earnings per share, if you plug in 52 cents, that is not just a drop of 33%, but instead it's a drop of over 42% on a year-over-year basis. So that again is a pretty substantial drop in earnings per share. So pretty much almost getting cut in half when it comes to the bottom line earnings. Now, this right here was the analysis where we pretty much mentioned that the median move is going to be down almost 8%. For Tesla, you can go back to the last 8 quarters, and this right here was the entire analysis for the last 2 years worth of earnings for Tesla. And the median move was down almost 8%, with an implied volatility move was also about 7 to 8%, give or take, so plus minus 7%. And this right here was the probability for the stock to actually go higher, and that was 37.5%. So really low probability that Tesla stock was going to go up after earnings. Last earnings, of course, it did increase 12% on a double miss. And this right here was the last prior to last earnings. It was the 4 times prior to the last earnings when the stock has declined on average by over 10%. So the probability kind of leading up to this earnings was really low. Expectations were still relatively low, so there was at least some expectation that, or some hope, I should say, from my side, that okay, if Tesla comes in slightly better than what the expectations are, it's possible that Tesla does see a bit of a relief rally, but given statistics, given the probabilities, it was really low at 37.5%. So in other words, 63% probability that it was going to go down by almost a median move of 8%. And that's exactly what happened. If you come over to Tesla here, you'll notice the stock price is indeed down. After hours down almost 8%. So this is just absolutely picture perfect in terms of what has already happened over the last 8 quarters, by down almost 8% median move and 37.5% for it to be higher. So the probability for it to go down was, of course, significantly more. Now coming over to, and again, I'm going to be doing a full analysis on the company. We'll take a look at the quarterly numbers and whatnot. But like it says, double miss on again Visa, Enphase, and Tesla, and Google coming in with a with also let's take a look. So Alphabet here Earnings coming in at $1.89, so beat on EPS. Revenue coming in at $84.74 billion, so beat on revenue as well. But YouTube advertising revenue did struggle from 8.93 down to $8.66 billion. But we'll just come back to that in just a minute. But this right here, of course, were the auto revenues for Tesla. Total automotive revenue sitting in at just, let's take a look. But the bottom line is, of course, we did see a bit of a decline on a year-over-year basis for the company, despite all the price cuts and, of course, the reduction and the increase in cost. Of course, margins have come down for Tesla. So Musk was asked in the Q&A portion of the call when shareholders can expect the first robotaxi ride, and he says, and I quote, "I would be shocked if he cannot do it in next year." And Musk has been promising since about 2016 that Tesla will turn its existing electric vehicles into self-driving vehicles with software updates, which the company calls full self-driving, and Tesla is separately working on a Cybercab dedicated robotaxis as well. He also referred to Waymo's commercial robotaxi services limited and fragile, and Tesla's system, he said, should be able to work anywhere in the world, not just in a geographically limited area. I mean, I would love to see Tesla's robotaxi operate here in India because of the really not so great traffic situation. But again, we'll talk about that in another video. Now, coming back over to Google. Google was also really not expected to do well after earnings. Exactly the same thing. It's kind of crazy how these numbers worked out perfectly. Google, along with Tesla, also only had a 37.5% probability for it to go higher post earnings. And the median move, again, based on the last 8 quarters, 2 years worth of analysis, it was for it to be down almost 2%. Well, guess what? Google is indeed playing along with that exact analysis, down a little bit over 2%. And of course, it is down. So coming down to $179.80. And this right here is the prior to this quarter, last 8 quarters worth of analysis with, like I said, the median move of almost down 2% and the average down about 84 basis points, and the probability again really low. And this is all because of the YouTube advertising revenue, of course, coming in and missing expectations. Google Cloud revenue came in at strong beat, and traffic acquisition costs came in at $13.39 billion versus $13.54 billion. Revenue was up 14%. So again, if you plug in some of these numbers onto our spreadsheet, $1.89 for the company here. So let's just come over to overview, and for Google, we're going to plug in $1.89. That's a 31% increase on a year-over-year basis. And then for revenue, we're going to plug in 84.74. So 84.74. That's going to be an increase of over 13.5, almost 14% if you round up on a year-over-year basis. That's exactly what they mentioned. Driven by search as well as cloud, which surpassed over $10 billion in quarterly revenues and $1 billion in operating profit for the company as well. So that's where we are with these two earnings. We can also take a look at Enphase, because Enphase also reported. So if you come down a little bit, Enphase looks like they missed on both EPS and revenue, $303.4 million. But the good thing is they actually reported a profitable quarter of 43 cents per share. So if you come over to Enphase, you'll notice that it's actually pushing higher, what I believe to be a strong quarter of profitability, considering the last quarter was a net loss for the company. They reported negative 11 cents per share on a standardized basis, and this right here, we're looking at 43 cents in earnings per share, although a miss, but still a profitable quarter, and revenue coming in at just over $303 million, as also mentioned in our website. So seeing a little bit of a recovery here, down up over 5%, back up to $108. A lot of consolidation sideways, so we're seeing that support levels stay put at $94, $95 with a resistance and a target all the way up to $141 for Enphase. Now, before we move forward, again, guys, if you want to get access to this entire platform, check out all the earnings that are coming up, not only this week, next several weeks out, with earnings and revenue expectations. So this right here in gray are all going to be the estimates for all these companies. For example, next week, pre-market on Tuesday, PayPal's reporting. We've got S&P Global reporting. If you scroll down a little bit more, you're going to have more companies like Starbucks over here reporting, and Public Storage is going to be on here. So there's a lot of companies, again, scheduled to report next week as well. McDonald's is on here for Monday. Then, of course, not to mention, we've got companies like Apple and Amazon and Microsoft, a lot of them scheduled to report not only in the coming weeks, but again, in the S&P 500, there's a lot of companies scheduled, as well as, of course, the entire fundamental analysis on individual stocks. You can come over here, pick any company you want to analyze, and of course, do your full fundamental analysis, full comprehensive breakdown on individual stocks here. You can plot for a lot of different things, really cool stuff that you can do. And again, we're adding more and more features every single day. Our team is hard at work to bring this platform to you guys, to make this tool available so that you can do your analysis in a very, very quick fashion and make better investment decisions. You can got your analyzer, discounted cash flow, discounted earnings model. You can calculate for whatever you want for intrinsic value for individual stocks. Again, take a look at that sensitivity grid, the matrix. And like I said, a lot of new features are coming online over the next 6 to 12 months. So 51% discount if you want to get access to this entire platform for MoneyVest. Link's going to be down below. We'd love to have you on board. So markets overall, if you come over to the maps here, we did have, of course, Amazon up over 2%. On the day, with Tesla selling off a little bit over 2% and then selling off even further after the earnings are released. Nvidia, Broadcom pushing higher, Nvidia slightly down, Texas Instruments, ADI, and XPI, all of them were slightly down on the day. So a little bit of a mixed day in the market, I should say, and mostly the selling pressure came in on semiconductors, energy, utilities. We had home improvement, industrials a little bit, healthcare, financials a little bit. Then we had some consumer defensive stocks selling off. So really, it were small pockets in the market that were pushing higher on the day, but overall the markets were down in the last 1 week. Again, real estate, the only sector that's pushed higher. For the most part, consumer defenses are flat. Everything else is straight up down on the week here, anywhere between 0.5% to as much as 3.5% as well. So coming over to the market's volatility here is down about 1.28%, which again, you can kind of see on our platform as well. So all the way down, you can see the VIX is at 14.91, down a little bit over 1.61 points, down almost 10% from the previous day. And again, this right here on the week, it is down a little bit over 10.9% as well. So if you come over to the daily chart, this right here is the entire, again, breakdown, and we've got 11 to as much as 12 very, very important levels as where we need to be a little bit more cautious. And again, the higher the VIX goes, the better the opportunities will be for us to dollar cost average and buy into the market. This right here is going to be, again, Tesla's symmetrical triangle. We're starting to see a bit of a breakdown below this $233 support. And the next target and the next support, unfortunately, is going to stay put down as low as $200, $208 per share for Tesla, in and around those prices. I think that's going to be that next level to keep in mind for Tesla. Coming over to S&P 500 here. So if you plot for SPX, you'll notice that we are starting to see a bit of a pullback again. And I'm sure tomorrow we're going to see a bigger pullback because SPY is currently down almost 40 basis points at the moment after hours, after the earnings. And QQQs are probably going to be down a little bit more, down over 60 basis points after the earnings release. But again, if you come back over to the indices, NASDAQ down about 6 basis points, but again, after hours, it's down a little bit further. This is the overall pattern of higher highs and higher lows. However, we did see a bit of a relief rally. I mentioned this in my yesterday's video to not fall for that, because there's going to be some relief rallies or dead cat bounces, but this is what the market does. Every single time we are on our way down, or we're starting to see some profit taking or pullbacks, we do get these relief rallies or these dead cat bounces or technical oversold bounces, so that the market kind of sucks you in and makes you believe that, okay, this sell-off is getting bought up, this sell-off is nothing but a short dip. And then, of course, we continue to roll over as the selling pressure continues. So I think it's really important to take a step back, just let the markets come to you, let the prices come to you, be more patient, and then you can take advantage of those deals and be a more smart, more aggressive investor when you know for a fact the markets are giving you a much better risk-reward ratio. So next level for the NASDAQ is going to be pretty much at 16.5. That's the level, and that's going to put us in a correction if and when we actually come down to that level, down about 11.5%, considering the RSI, the L3 banker oscillator, is still kind of midway on its way lower. And same thing is true for the S&P 500 as well. As it continues to come down, next really important support is going to stay put at 52.60s, 52.50s, and that's also going to put us in a little bit of a pullback territory. It's not going to be a dip because we're going to be over 5%, but it's also not going to be a correction because we'll be under 10%. It'll be 7%, so we'd be in a quote-unquote pullback territory for the market. So that right there is going to be that higher high and higher low. And we're planning on putting our MoneyVest index on the MoneyVest platform as well. But right now we're sitting at 3.81. This number will get updated shortly. But right now, inside any of these ranges, anything under 3.5 starts to present some pretty decent risk reward ratios for dollar cost averaging and buying back into the market. Coming back over to Apple here. So Apple on the day is slightly up 0.5%, but still within the context of this uptrend of higher highs and higher lows, for the most part consolidating sideways. Support level is going to stay put at $220. And if you do end up, let's say, breaking down below this level, next support is going to be down as low as $198, close to $200 per share for Apple. And again, after hours, slightly down about 15 basis points. Amazon, on the other hand, is also, it actually did push higher up almost 2%, but again, get rejected at 189, 190. So this right here is the level that we talked about in one of our previous videos. An update, previous level, boom, got rejected once, twice, 3 times, and once again, getting rejected at those levels. Support level is going to stay put down as low as 169 to close to 170 for Amazon. Tesla, we've already discussed, starting to see a significant breakdown below 230s here. Next support is going to be down in the low 200s. And again, the median move was pretty much expected for Tesla to be lower by almost 8%. And that was only a 37.5% probability that it's going to go higher. 63% probability that it was going to be lower after the earnings based on the last 8 quarters worth of analysis. Going over to NVIDIA now, and NVIDIA here on the day down about 77 basis points, after hours down almost 1.5%, trading as low as $120, and this right here is going to stay put as a very, very important support for NVIDIA, close to 118. A lot of consolidation sideways in that range for NVIDIA, with a resistance and a targets up to 139, close to $140 for NVIDIA. Advanced Micro Devices here also really just trading sideways, down almost 1% after hours. But this right here is the entire breakdown for Advanced Micro Devices. A lot of consolidation, like I said, with a massive support sitting roughly in the 150s, also aligned with that 200 simple moving average, and a resistance and a targets back up to 184 for AMD. And we have, of course, gotten rejected here, sold all the way back down. RSI, MACD, and the L3 banker oscillator does come down to pretty reasonable oversold levels. So AMD could be looking at a nice sort of potential trade idea prior to the earnings for this company next week. Talking about PayPal, and PayPal here also selling off, down about 1.7%. They are reporting next Tuesday. Support level is going to stay put roughly at $56, $57 with a resistance and a target up to $65 per share for PayPal moving forward. So a lot of consolidation sideways in that range for PayPal, but resistance and target is going to stay put at 65, support level at $57 a share. Visa, on the other hand, this right here is the lower high and lower low. So it looks like they did beat on EPS but miss on revenue. The stock price is down a little bit over 3% at the moment, lower highs and lower lows. I do want to mention that our platform actually takes into account both buy side and sell side analyst estimates, and also is on a non-GAAP basis. So we do have Visa over here, which is showing us as a, let's take a look. Scroll down a little bit, $8.9 billion in revenue, $2.42 in earnings per share, which again is similar to what we have here, $8.9 billion and $2.42. But it does show a small beat on earnings per share, whereas our platform shows a miss. And that's because, again, we take into account a lot of analyst estimates from both buy side and sell side, and then we aggregate them and then figure out, okay, whether the company was beating or missing expectations. But the bottom line is the stock price, again, still down over 3%, lower highs and lower lows. Next support really is going to be down at 250s. I will be doing a video on Visa as well, although I have done a pre-earnings video on Visa. But this right here is the entire technical analysis with the next support and target sitting roughly in the 250s for this company. Talking about Meta Platforms, and Meta here, consolidating sideways, so slightly down about 1.3%. Again, this right here is going to be that next support level to watch in the 458, all the way down to this area of demand in the 420s, and a resistance and an area of supply sitting roughly in the 540s to as much as 575 for Meta. Talking about Netflix, and Netflix here also consolidating sideways. They already did report their numbers last week, and we did have beats on both accounts. But this right here is going to be the Netflix technical analysis, where it is getting rejected here again in the 690s or 700s, and it's starting to consolidate and start rolling over. Support level is going to stay put at $635, $636 for Netflix. Now coming over to Google. And Google here, we discussed, it's starting to roll over a little bit. That's normal. And next support really is going to be down here in the 160s. Maybe, just maybe, we could identify a reasonable support here at close to 174, 175 for Google. And of course, if we do end up, let's say, breaking down below this, the next target is going to be inside this green rectangle, this area of demand, and that support in the 160s for Google as well. Talking about Microsoft, and Microsoft here also starting to come down. Next support really is going to be down at 431. So this right here is going to be that level to keep in mind. Of course, if we do get up, break down below this, next support is going to be down inside this green rectangle for Microsoft, sitting roughly in the sub 400s, closer to 394, 395 for Microsoft as well. And finally, we come over to Enphase and Costco, and Enphase here starting to move higher, up almost 5%. So that is a strong move to the upside. Massive consolidation sideways here inside this green rectangle, this area of demand. Resistance and supply is going to stay put all the way up to 138, 141. And finally, we come over to Costco, which has been consolidating sideways for quite some time at that support at 835, 836. If you do end up, let's say, breaking down below this, next support is going to be down at 786 for Costco as well. So hope you all enjoyed this video. I'm going to be doing a more detailed analysis on a lot of these companies. I do have a flight to catch in a couple hours. So again, links can be down below if you want to get access to the entire MoneyVest platform, do your full fundamental analysis on a lot of individual stocks, and of course, take a look at the company's MoneyVest metrics, fundamental analysis, calculate discounted cash flow models, discounted earnings, and visualize a lot of these metrics for the company's financials. 51% discount available until the end of this month, and you also get access to our entire Discord channel with the trade alerts and trade ideas as well. As always, happy investing. I'll see you all in the next video.